If you're a retiree, a newcomer, a permanent resident cardholder, or anyone who submits tax documents in America, there's a completely new federal tax agency regulation arriving in 2026 that could fundamentally transform how you submit paperwork forever. And I'm not discussing a small modification here. This regulation has the potential to influence your tax filing, your diligently earned funds, and if you're not cautious, even your residency documentation status. Imagine this. You've been submitting your tax documents the exact same way for years, perhaps even multiple decades. Everything's routine, everything's familiar. Then out of nowhere, you receive a notification from the federal tax agency telling you that you failed to disclose something you had absolutely no idea you were supposed to disclose. Now, imagine that one error triggering financial consequences and examination or worse, postponements in your naturalization paperwork. That's precisely why this new regulation is so critical. Starting in 2026, the federal tax agency is implementing new mandatory disclosure requirements that directly target retirees over 60 and anyone who wasn't born an American citizen. The problem? Most people have no clue this is coming, and that lack of awareness could cost you dearly. But here's what I want you to know right now. Nothing I'm about to share is designed to scare you. My goal is simple, to prepare you. When you understand what's changing and follow a few straightforward steps, you can sidestep these problems completely. Over the next several minutes, I'm going to break this down in the clearest, most practical terms possible. You'll learn exactly what this new regulation entails, who it impacts, and most importantly, what you need to do right now to protect yourself. By the time we're done, you'll know whether this applies to your situation and how to handle it with complete confidence. Look, when the government changes something this significant, it's natural to feel confused or even a little anxious. That's exactly why I'm here. My mission is to walk you through this step by step in plain everyday language without the legal jargon and without unnecessary alarm. So, take a deep breath, get comfortable, and let's dive into exactly what the federal tax agency is changing and why it matters to you. Let's start with the most critical question. What exactly is this new federal tax agency regulation? Beginning with the 2026 tax year, which means the tax filings you'll be submitting in early 2027, the federal tax agency is rolling out expanded mandatory disclosure requirements on the standard tax filing document 1040. This change represents part of a much larger initiative by the federal tax agency to enhance financial transparency and strengthen compliance with international account disclosure laws. Put simply, the government wants far more detailed information from specific taxpayers about money, assets, and income that exists beyond American borders. Here's what the new regulation actually means. Anyone who is 60 years of age or older and anyone who was not born an American citizen will now be required to answer additional questions directly on their regular tax filing. These questions cover international bank accounts, international pensions, international government retirement benefits, and cross-border money transfers. These used to be questions that only appeared on specialized documents or were sometimes optional depending on your circumstances. But starting in 2026, they become mandatory for millions of taxpayers. This means retirees, permanent resident cardholders, naturalized citizens, and many visa holders will no longer have the luxury of skipping over these sections or assuming they don't apply. The federal tax agency is also strengthening data sharing between agencies like Immigration Services and the Retirement Benefits Administration. Translation: what you report on your taxes will be cross-referenced with immigration and financial records more thoroughly than ever before. According to the federal tax agency, the objective is to reduce what they call unintentional failure to comply. That's situations where people violate tax rules simply because they didn't understand them. But here's the reality. Once this regulation takes effect, the burden falls entirely on you to answer these new questions correctly and completely. Even if you filed taxes the identical way for decades, your 2026 filing will look different, and ignoring these changes could create serious, lasting problems. That's exactly why understanding this update now before it goes into effect is so absolutely vital. One of the most significant aspects of this new regulation involves dramatic changes to the disclosure thresholds for international financial assets. In the past, many people didn't need to worry about filing additional documents because the limits were relatively high. Under the old system, you only had to file Document 8938, which reports specified international financial assets if the total value of those assets exceeded $50,000 at the end of the year, or more than $75,000 at any point during the year if you're a single filer living in the United States. But the new 2026 regulation slashes those limits dramatically for retirees and newcomers. Now, if you're over 60 years old, or if you're a newcomer filer of any age, the threshold plummets to just $25,000 at the end of the year, or $40,000 at any time during the year. That's a massive shift. It means countless people who never had to disclose international accounts before will suddenly be required to do so. 2. And when we talk about international assets, we're not just referring to large investment portfolios. This can include straightforward things like a bank account in your birth country, a small retirement account from years ago, a life insurance policy with cash value, or even partial ownership of family property overseas. In addition to Document 8938, there's also the International Bank Account Disclosure. Now, the International Bank Account Disclosure rules themselves aren't changing. You still must file an international bank account disclosure if the total value of all your international accounts combined exceeds $10,000 at any point in the year. However, what is changing is how the federal tax agency will cross-check this information. Under the new system, your answers on Document 1040, your Document 8938 if you file one, and any international bank account disclosure records will be automatically compared. If you answer yes to having international accounts on your tax filing, but fail to file the required documents, or if the numbers don't match up, the system can generate automatic notifications and potentially trigger an examination. In other words, there will be significantly less room for mistakes, misunderstandings, or forgetting to disclose something that seems small. This is why even people with modest savings outside the United States need to pay extremely close attention to these new requirements. At this point, you might be wondering something completely reasonable. Why are retirees and newcomers being singled out by this new regulation? The Federal Tax Agency has provided a clear explanation. According to their own research, these two groups represent the largest source of unintentional mistakes when it comes to international account disclosure. Many retirees have lived long, complex financial lives. Some retired abroad and later returned to the United States. Others receive small pensions or government benefits from countries where they worked decades ago. A significant number simply don't realize that the United States requires worldwide income disclosure, even if that income is minimal or already taxed in another country. The same principle applies to newcomers. Millions of people who move to America maintain bank accounts, property, or investments in their country of origin. They may use those accounts to support family members, save for emergencies, or handle financial matters back home. From their perspective, those accounts have nothing whatsoever to do with the United States. But under American tax law, they absolutely do. The Federal Tax Agency believes that many people in these groups aren't intentionally hiding anything. They just don't understand the complicated disclosure rules. The problem is that, from the government's perspective, whether a mistake is intentional or not, it's still considered failure to comply. So instead of relying on people to discover obscure documents on their own, the Federal Tax Agency has decided to force the issue by making these questions impossible to miss. By placing them directly on the main tax filing and lowering the disclosure thresholds, the government is essentially saying that no retiree or newcomer can claim lack of awareness anymore. Even a small, inactive bank account that you forgot about could now require formal disclosure. That's why this change is such a monumental deal and why so many people will be affected starting in 2026. Before we continue, let me pause for just a moment. If what you're hearing right now is helping you understand something you didn't know before, take a second to hit that like button so more retirees and newcomers can discover this information. These regulation changes are genuinely confusing, and the more people who see this, the fewer people will end up with unnecessary problems down the road. Now let's discuss how this new regulation affects different groups of people, because the impact isn't exactly identical for everyone. If you're a retiree who's already an American citizen by birth, you might be thinking, this doesn't really concern you, but that's not necessarily accurate. Under the new requirements, any retiree over the age of 60 who has financial connections outside the United States will have to answer the expanded questions on their tax filing. If you receive a pension from another country, if you have a small savings account overseas, or if you still own property or investments abroad, you will now be required to disclose that information more clearly than ever before. Even accounts that are rarely used or that you only keep open for convenience when visiting family will count. The federal tax agency is no longer treating international assets as something only wealthy people need to worry about. For retirees, the assumption will now be that if any international accounts exist, they must be disclosed properly and in detail. For permanent resident cardholders, the situation becomes even more delicate. As a lawful permanent resident, you're already required to follow the same tax rules as American citizens, including disclosing worldwide income. But what makes this new regulation especially critical is the connection between taxes and immigration. When you apply for American citizenship, Immigration Services reviews your tax history as part of the good moral character requirement. Under the updated system, Immigration Services will have greater access to federal tax agency data and will be able to see whether you answered the international account questions correctly, whether you filed required documents like the International Bank Account Disclosure or Document 8938, and whether there are inconsistencies in your records. This doesn't mean that a simple mistake will automatically destroy your immigration case, but it does mean that any mismatch or missing information can trigger delays, additional questioning, and heightened scrutiny during a naturalization interview. In some situations, serious tax failure to comply could even lead to denial of an application. That's why permanent resident cardholders in particular need to be extremely careful and organized once this regulation takes effect. If you're a naturalized citizen, you might assume that because you're now fully American, these rules no longer apply to you in any special way. But the federal tax agency has specifically included naturalized citizens in the expanded disclosure group. The reasoning is straightforward. People who were not born in the United States are statistically more likely to still have financial ties to other countries, even many years after becoming citizens. So, even though you're treated the same as any other American for tax purposes, you'll still be required to answer the new questions in greater detail. And for those who are in the United States on work visas or other temporary statuses, the regulation can matter significantly as well. If you meet the residency requirements for American tax purposes and file tax filings here, you'll also be subject to these expanded disclosure obligations. For visa holders who hope to apply for a permanent resident card in the future, tax compliance is extremely important. Problems with federal tax agency disclosure can complicate visa renewals, adjustment of status applications, and other immigration benefits. In short, this new regulation reaches far beyond just retirees. It touches almost anyone who has lived, worked, or built a life across more than one country. So the big question now is very simple. What should you actually do to protect yourself? Instead of worrying endlessly, the smartest approach is to take a few practical steps right away. The first and most important step is to gather complete information about any financial connections you have outside the United States. This means creating a clear list of every international bank account, pension, investment account, insurance policy with cash value, property interest, or business ownership you might have. Even if an account has very little money in it, even if it's been inactive for years, and even if it's only used occasionally when you travel, it still counts. Write down the name of each institution, the country where it's located, the account number if you have it, and the highest balance or value during the year. Many people get into serious trouble simply because they never took the time to organize this information. Doing this one step early can save you enormous stress later when the new regulation takes effect. The second step is to review your current international bank account disclosure filing situation. Remember, the international bank account disclosure requirement already exists today and isn't waiting until 2026. If the total combined value of all your international accounts ever went above $10,000 at any point in the year, you're required to file an international bank account disclosure electronically with the Financial Crimes Enforcement Network. This applies even if each individual account is small. Many retirees and newcomers are genuinely surprised to learn that this rule has been around for years. If you realize that you were supposed to file international bank account disclosures in the past, but never did, don't panic. The Federal Tax Agency offers programs known as streamlined filing procedures that allow people to come into compliance with reduced financial consequences if their failure to file was not intentional. The worst thing you can possibly do is ignore the issue and hope it disappears. Taking action now before the new 2026 system increases enforcement is one of the smartest decisions you can make. The third step is to prepare for the new document 8938 requirements. Because the disclosure thresholds are being lowered dramatically, many people who never had to file this document before will suddenly need to start filing it. If you believe your international assets might be above the new limits of $25,000 at the end of the year or $40,000 at any point during the year, begin collecting statements and records now. Document 8938 requires detailed information about each asset, including values in American dollars. Waiting until the last minute during tax season can make this process incredibly difficult, especially if you need to contact international banks or institutions to obtain old records. Being proactive will make the transition to the new rules much smoother. The fourth step is to make absolutely sure you're correctly disclosing any international income you receive. This is especially important for retirees who get pensions or government retirement type payments from another country. Many people assume that because this money is already taxed overseas, it doesn't need to be disclosed in the United States. But in most cases, American tax law requires you to disclose worldwide income, including international pensions, annuities, rental income, or interest earned abroad. Some countries have tax treaties with the United States that may reduce or eliminate double taxation, but those rules can be complicated and vary from country to country. The new Federal Tax Agency questions on Document 1040 will specifically ask about these types of payments, so ignoring them will no longer be an option. If you're unsure how to handle international income, speaking with a qualified tax professional who understands cross-border tax issues can make a tremendous difference. The fifth step, which is particularly important for permanent resident cardholders and anyone planning to apply for citizenship, is to keep organized records of everything related to your taxes. This means saving copies of your tax filings, international bank account disclosure submissions, Document 8938 if you file it, and any documents that show the value of your international accounts. When you go through the naturalization process, immigration services may ask to see proof that you've properly complied with tax laws. Having clear, well-organized paperwork can turn what might feel like a stressful interrogation into a simple and straightforward conversation. Many immigration delays happen not because a person did something wrong, but because they cannot easily prove that they did things right. Good record keeping is one of the easiest ways to protect yourself. To help you understand why all of this matters in the real world, let me share an example that illustrates how easily problems can develop. Imagine a retired newcomer who has lived in the United States for decades and has always filed taxes honestly. She keeps a small bank account in her birth country with about $15,000 in it, money she uses when visiting family because the amount isn't very large, and she never thought of it as connected to her American taxes. She never filed an international bank account disclosure and never mentioned it on her tax filing. Years later, when she applies for American citizenship, the immigration officer asks about international accounts. Suddenly, this small, innocent account becomes a major issue. Her application gets delayed while she works with a tax professional to correct past submissions and prove that the mistake was unintentional. The entire process becomes stressful, expensive, and frightening. Under the new 2026 regulation, situations like this are far less likely to be overlooked. The mandatory questions on the tax filing would force her to think about that account from the beginning. In many ways, the new system is stricter, but it's also clearer. It removes confusion and makes it much harder for honest people to accidentally make costly mistakes. There are also a few common questions that many retirees and newcomers are already asking about this new regulation. So, let me address them directly. One of the biggest concerns is whether this change affects regular American government retirement benefits. The answer is no. Nothing in the 2026 Federal Tax Agency regulation changes the way normal American government retirement payments are taxed. Those rules remain exactly the same as they are today. What the new regulation does focus on is international government retirement or pension-type payments that come from another country. If you receive retirement benefits from a government outside the United States, Those payments are generally considered taxable income here, unless a tax treaty specifically says otherwise. The expanded questions on Document 1040 will now ask more clearly about these international payments, which means you'll need to disclose them accurately instead of assuming they don't matter. Another question people ask is whether tax treaties still apply. The answer is yes. Treaties between the United States and other countries can still reduce or eliminate double taxation. But you must properly disclose the income first in order to claim those benefits. The new regulation doesn't cancel treaties, but it does make it harder to ignore international income altogether. Another extremely important topic to understand is the potential financial consequences for failure to comply. The Federal Tax Agency takes international account disclosure incredibly seriously, and the results for mistakes can be severe. If you fail to file an international bank account disclosure when required, the financial consequence for an unintentional violation can be up to $10,000 per account for each year you didn't file. If the Federal Tax Agency believes the failure was deliberate, the financial consequences can be far higher, sometimes reaching 50% of the account balance. For Document 8938, the financial consequence for not filing when required starts at $10,000 and can increase to as much as $50,000 if the problem continues after the Federal Tax Agency notifies you. Beyond the financial consequences, there are also practical results. Failing to disclose international assets can extend the amount of time the Federal Tax Agency is allowed to examine your tax filings. And for newcomers, it can create serious complications with visa renewals, permanent resident card applications, or citizenship cases. The important thing to remember is that most people who get into trouble didn't intend to break any rules. They simply didn't know what was required. The new 2026 system is designed to remove that excuse by making the requirements impossible to overlook. Before we move toward the conclusion, let me pause for just a moment with a quick reminder. If this information has been valuable to you, consider sharing this video with any older parent, grandparent, or newcomer friend who might be affected by these changes. A simple share could save someone you care about from a lot of confusion and stress in the future. As we get closer to 2026, it's important to keep the bigger picture in mind. The purpose of this new Federal Tax Agency regulation isn't to punish honest people. The goal is to create a tax system where information is clearer, disclosure is more consistent, and everyone is following the same set of rules. For many years, international account disclosure has been confusing and easy to misunderstand. Millions of retirees and newcomers have made small, unintentional mistakes simply because the requirements were buried in complicated documents that most people never saw. The new system brings those questions directly onto the main tax filing so that people cannot miss them anymore. In a way, this actually provides more protection for ordinary taxpayers. If you answer the questions honestly and keep proper records, you should have nothing to fear. And if you realize that you may have made mistakes in the past, there are still options available to correct them before the new enforcement system becomes even stricter. Acting early, getting organized, and seeking professional advice when needed are the best ways to stay safe. The most important message I want you to take away from this video is that knowledge is your greatest protection. This regulation change may sound intimidating at first, but once you understand it, the steps to comply are very manageable. Gather your information, understand your filing obligations, keep good records, and don't ignore international accounts simply because they seem small or unimportant. Small details are exactly what the Federal Tax Agency will be paying more attention to in the future. If you prepare now instead of waiting until the last minute in 2027, you can avoid nearly all of the potential problems that this new regulation could create. Let's take a moment to quickly recap everything we've covered, so it's absolutely clear in your mind. Beginning with the 2026 tax year, the Federal Tax Agency is introducing expanded mandatory questions on the regular tax filing that will specifically affect retirees over 60 and anyone who was not born an American citizen. These questions will focus on international bank accounts, international pensions, international government retirement benefits, and other financial connections outside the United States. The disclosure thresholds for Document 8938 are being lowered, which means many more people will now be required to disclose international assets than ever before. The Federal Tax Agency will also be cross-checking information more aggressively between tax filings, international bank account disclosure submissions, and immigration records, leaving much less room for mistakes or misunderstandings. For permanent resident cardholders and people applying for citizenship, accurate tax disclosure will become even more important because discrepancies can lead to delays or extra scrutiny. None of this means that honest taxpayers should panic. It simply means that paying attention to international financial disclosure will no longer be optional. By gathering your records early, understanding your obligations, and seeking help when needed, you can navigate this change smoothly and confidently. The people who prepare ahead of time are the ones who will have nothing to worry about. If you found this video helpful and want to stay updated on future changes that affect retirees and newcomers, make sure to subscribe to USA Daily Alert so you never miss important information like this. Tax laws and immigration rules can change quickly, and staying informed is one of the best ways to protect yourself and your family. And as always, I need to remind you that everything shared in this video is for general educational purposes only. It's not legal or tax advice. Every person's situation is different, and the rules can be complex depending on your country of origin, your income, and your financial history. If you have questions about your specific case, it's always a good idea to speak with a qualified tax professional or immigration attorney who can review your individual circumstances. Government policies can change, and official guidance from the Federal Tax Agency and Immigration Services should always be checked when making important decisions. Thank you for spending this time with me and for taking steps to protect your financial and immigration future. I'm Archer from USA Daily Alert, and I'm here to help you stay informed and prepared. Stay safe, stay organized, and I'll see you in the next